Where is it?
And welcome out to the Halftime Report. This is Coach Cody. We have myself, Coach Mark, and the great Gino Poor. How are you guys doing today?
Hey, what's up, man? How you doing?
Oh, there?
Yeah.
Gino is enthusiastic enough for 3 or 4 people, so I don't even feel the need to answer. So,
Okay,
Well,
Gino,
I got
how are
something
you
for you,
doing
Mark.
today with Mark not wanting to exchange pleasantries?
Yeah.
Gino's.
We have one justice here today. One justice, brother. That
Indeed,
means,
we do.
Cody, you and I are going to get a chance to talk, my friend.
Oh, well, there's plenty of talk about going on in the market between more China talks, GE, someone saying that they're more corrupt than Enron. A lot of things going on. So let's go ahead and jump right into it. Gino, why don't you go ahead and pull up your screen and we can.
Now, can you be more corrupt than Enron, or can you? I mean, can the devil only be the devil? I mean,
I don't know.
Can you be as corrupt as Enron? That seems a little hyperbole to see more corrupt than Enron, because Enron was pretty shady.
Yeah, they were actively calling power grid operators in California while people are dying of heat stroke and stuff, and they were shutting down the power on purpose. Yeah, that they were doing.
So I mean, I don't know if you can be more corrupt than Enron. You can be as corrupt as Enron. I think Enron is the gold standard for publicly traded companies.
Corrupt.
Yeah.
Gino, you are muted right now, and I still just see your screen.
See, that's because there we got Justice Guy. He did that to me. See, Mark? Stop muting us, Mark. There we go.
I do not have any control over the things.
So, Mark, you were there on the Enron, right? You remember that?
Mm-hmm.
So Enron, oil energy company, huge. Just a real brief, how would you sum it up? What happened that was so bad? They actually made a movie of it.
I mean, just corruption from at the highest levels, defrauding, accounting issues, horrible
accounts.
Business practices. I mean,
accounts, remember?
They define. I mean, they really set the standard for accounting practices.
And their accountant was who? Art Anderson.
To mislead the public on revenues, profitability. I mean, Enron is one of the reasons that whenever you even hear someone even alludes to the word of accounting practices, you'll see stocks take big drops. If there is any even reference to accounting irregularities. And that really all stems from Enron. I mean, and it persists to this day. You still see it in companies where if the word accounting comes up in a public statement with a publicly traded company, is usually going to take a pretty good drop.
So when I hear that word as a trader, when you hear the word accounting or legal or investigation
investigation's not as bad as accounting. Accounting, really, the market's just like immediate sell-off.
Insurance fraud, any of those key words, guess what triggers my brain? Out of the money puts. Buy out of the money puts. That's the only time I'll buy really cheap puts out of the money, because a company will take a huge dive.
So with that statement being read, let me read to you what this report said that caused this on the news. It says, my team has spent the past 7 months analyzing GE's accounting, and we believe the $38 billion in fraud we've come across is mere tip of the iceberg. They think that Enron has been, from an accounting and financial standpoint, has basically cooked their books and hid what they actually have on the book. So that's exact verbiage that Mark was saying. When you hear those words, people don't like it. It's down 13% on the day.
Wow. And it says whistleblower calls a bigger fraud than Enron. That's the same guy who was the whistleblower on Madoff.
Yep.
So Madoff's whistleblower. Now, Madoff was the biggest crime ever.
All right. Gino, let's go ahead and look at the market.
But Madoff wasn't a publicly traded company.
No, but he traded.
Yeah.
So many huge. He's the biggest trader of the world.
I mean, if the GE thing really is an epic, I mean, this would be huge. GE is an iconic name in American business. And if there really is something epically criminal here,
right?
It's GE.
Right.
They have a bigger brand name than Enron ever did.
Let me put oh my gosh, there it is, guys. So here's a question for you. GE, oh my God, I know so many people have this in their portfolio. How many portfolios do you think is holding this stock right now?
Oh, a lot.
Oh my God. So I'm going to go to GE real quickly and check something. Their dividend yield's only 0.5%, but do you think they're going to keep that 1 penny dividend?
No, especially if they're cooking their books. If that is true, then yeah. And actually, if you read the article, the other taboo word that you don't say in the market is bankruptcy. That was also stated.
Bankruptcy, restructuring. Here's the thing, guys. The lesson here, number one lesson is this. Your portfolio is never safe without insurance, because even this is one of the biggest companies in the world at one time. For the longest time, GE is one of the longest held public companies too, next to Ford. I think they were the longest in the Dow, one of the top 5. If it can go bankrupt, anybody can. If it can go bankrupt, remember Kodak, Kmart,
Yep.
Enron, my God, anybody. So this is why I like to be a trader, not an investor. The sad thing that really is dampening to think about is not only the corruption, but how many retirement accounts, how many people work at this company are buying those stocks and stock sharing programs and stuff. And they're basically screwed. I mean, look at this. What are they going to do? And if they're not educated, guess what they're thinking? Oh, I'll just hold on for the long run. And this could go bankrupt. So
listen, I lean more to the investing side than anybody else at tackle trading.
no.
But first of all, there were a million warning signs on GE a billion years ago.
Yeah, long time.
I mean, so the fact that GE had problems, this is going back a couple years now, but it's just diversification. It's just diversification. If any singular event hurts your overall portfolio, you're not diversified enough. It's just that simple. There's a lot of wonderful companies out there. So there's a lot of wonderful ways to structure a portfolio. But hey, listen, and this was with Enron. I mean, to go back to Enron, I mean, one of the things about Enron is there were so many employees that their entire savings, their entire investment portfolio was made up of Enron stock.
Yeah, and they were told to buy more before
they were kept telling to buy more. And this is what happens for individuals that work in specific companies. Yeah. And even novice investor who find a company that they just love, is that their portfolio becomes so out of whack that singular events or downtrends on an individual stock, wipe them out. It's financial education 101. Wow. On one hand, I don't feel bad for them. On the other hand, of course, I do.
If our students want to learn about it, there's a great documentary that was called.
You're breaking up there, Cody.
Oh, it looks like my internet is unstable over here.
You got trade winds coming through.
Enron, the smartest guys in the room, and that documentary is really, it goes into great detail. Everything from the scandal, how they cooked their books, how they were shutting down the power grid in certain areas, how the CEOs were secretly selling stock shares. Excuse me.
Yeah.
So it's like, as they were saying, and posting the next greatest earnings, and all these beats. But every time they're posting these beats, the stock kept going down, and the stock kept going down because all of the high-end owners, they were selling. They knew what they were doing. They knew it was a scandal. They were getting rid of that stock as fast as they could.
They're lying on the fundamentals, cooking the books. And here's the thing, guys. You can't pick. Here's a big lesson. You cannot pick whether you're a technical analysis person or a fundamental person. Fundamentalists have to look at the chart. You have to. Because
I agree with that 100%.
You have to. If you don't look at the chart, you're going to get burned on these breakdowns. And the fundamentals, they could be lying and cooking the books. I've seen it many times, especially on the big companies. And then the technical analysis guys have to look at fundamentals, because there's times when your technical chart does not justify the price. So when it finally gaps, it does go bankrupt quite quickly. So especially if you're a bottom fisher, you do not. Now, I can't tell you what to do.
No, and I am the #1 bottom fisher at tackle trading, and there ain't a close second. I mean, almost all of my entry techniques are bottom fishing.
I hear you.
And you do have to be like
a fundamentalist. You have to be a fundamentalist.
You have to bottom fish. You have to believe in it. You have to know a little bit, not a little bit, a lot of bit about the company. I mean, it's one of those things that when I go on the lounge and sometimes recommend a bottom fishing, which, you know, I've had a pretty good track record at this year. You know, that's one of the services we provide. But I just want to make one more point before we get on to the interesting markets. Listen, if you're watching this live or you watch this in the recording, obviously you believe in financial education, and obviously you're here and you believe in the importance of securing your financial future. So I'm not talking to you. But I am talking to you in the sense is that you might have family members. Don't ever let someone you love get caught up in an Enron type situation where their entire portfolio is a single stock or two stocks or something. I mean, these things happen in life, and it is devastating when things go wrong to their retirement, to their lives, to their planning. If you ever run across a family member, a friend, someone you care about, and the subject of money comes up, just ask them if they're diversified. Just ask them if they're diversified, because
So even if you have 5% of your portfolio in GE, at least the other 95% is not going bankrupt.
Yeah, right? I mean, once again, like if an Enron employee had 5% of their portfolio in Enron, yes, that would be, you know, nobody would be happy about that, but the big picture of life doesn't change.
Yeah. So real quickly, anybody here in the halftime report, brand new, not who here is not a member of Tackle Trading? Who here is not a member? Anybody?
We have lots of non-members every day.
So I just want you guys to know, Cody and I had a great morning. I, for some reason, drank too much coffee, and I broke out and started doing some strategies and options, Mark, that are bear strategies that they don't really teach anywhere else. They're advanced strategy stuff that the pros do, because they're too hard to teach by a book, but they were covered puts, ratio covered puts, protected naked puts, and playing the VIX and UVX and that kind of thing. There was 3 strategies we did in the lounge this morning. So the pro members really benefited, and we're gonna do part 2 of that tomorrow. If you wanna catch part 2 of that, guys, this is more valuable than the $97 a month membership. We should have made a $3,000 class out of it, but Cody and I were doing some great strategies this morning. Found so many. Who was there? Who liked it? And yeah, Jonathan was there. Our normal crew. Yeah. Did you guys know?
And that's the thing is, philosophically, we've made the decision. I'm not saying we'll never have a premium product we sell again. There might be different partnerships, different things we create that require it. But we really philosophically, no matter what the value, no matter how insane we think the product is, we are trying to philosophically include it into our normal subscription.
Right.
And you saw that recently with the step system, where the step system, this premium system, and we got more stuff we're working on behind the scenes that to keep adding to the value of that pro membership. We're really, really committed to it.
No, real quickly, who missed my pro only strategies you'll never see anywhere else? I did 3 strategies you're not going to see anywhere else unless they've been trading for at least 15, 20 years. They're basic strategies: shorting stock, going long stock, selling calls and puts. And we actually fixed a naked strangle. So Buddy Krill, yep, it's all good. Okay, so who missed it? Anybody missed it? You got it, William. So if you missed it, we recorded it. We recorded 3 different segments. It's archived on our site. Cody's going to be posting it there. And so even if you missed it and you want to go back, so by getting a membership at Tackle Trading, you get archived lessons in the past, tons of them. It'll take you months to gather it all, but it's strategies you're not going to see anywhere else that you can do with a little bit of basic options. Okay, so Mark, real quickly, where we left off on the halftime report, you also get, as a pro member, our famous products. Check this out. And I'm really happy about this one. Every week we get a newsletter: stock report, option report. These are stock and option picks. Mark, have you gone through our stock picks for the week yet? Just our short ones?
Well, I always go through them on the weekend.
Well, yeah, but here, look how they performed this week. Look at American Eagle Outfitters. Nice short setup there. Look at this. Doing pretty good this week, right, guys? It triggered yesterday. Look at this one here. Nice short position here. Big lots. Is it possible big lots could drop that much? Look at this whole week. It's just boom. Nice trigger. We're doing good on that one. These are picks we put out every week. We have about 20 to 40 picks every week. Look at this one here. When we're trying to figure out, Mark, which one of the Justice brothers worked at Banana Republic? Was that you or Matt?
No, that was my brother Matt. I think he worked at Banana Republic for 2 or 3 days.
Oh, I thought it was one day. Look at this.
It might have been one day. It might have been one day.
Yeah, I can see that. So look at this short position here, trigger. Look, we're right here. These shorts really paid off this week. We saw it coming. We're bearish on the retail sector and especially energy. Look at Halliburton. Halliburton's even gone farther to where it's getting so low you start to decide, where do I buy this thing? What was the other one? Look at these. Look at this one here. Look at this drop here. Guys, a lot. It's $12. It's almost $12 on a short position. Here's one right here. Slumberger broke out of support. This is my pick, by the way. Down 10%. Down 10%. Sunoco's about to trigger, guys. Trigger under 27 here. It was a swing trigger up here. 2 more. Almost every single pick has paid off. This one's breaking even here on our short list. Almost every single one. So this is just an example of good, really good. I wanted to show you this one. Look at our bull pick. Not doing too bad. So there you go, guys. That is a great way to advertise tackle. We had a great show. The lounge itself today was worth the monthly subscription, but the watch list on the stock report, kicking butt, just kicking butt. So I'm pretty happy about that in this market. Why? Because you know why? I'm walking around. My city knows I'm a trader. I walk into Trader Joe's. They're like, hey, man, wow, what happened to the market? Are you okay? I'm fabulous. How are you?
I mean, Gino, it is so funny because even individuals that know what you do or kind of know what you do, they know you're in the market, they know you're investing. Don't you get that all the time on market drops?
Yeah.
That they're like, oh, are you okay? Like somehow you're not good, because that is how ingrained the mindset is, that if the market goes down, you being a trader must be hurting.
Oh, yeah, they feel for you.
I mean, that's how ingrained that bullish bias is.
Well, you know what's funny, Mark? Actually, you know what's going on behind the scenes, because I could read people. I could hear their thoughts. It's just a thing I was born with, you know. By the way, I can read palms. Here's the deal. I can read the stars, Mark. Here's the thing. Is this?
Gino, you made me laugh twice already today. You're on a roll.
Here's the thing. Is the people that are working, I'm not saying just Trader Joe's. I just go there all the time because it's right next to my house. When they know you're a trader, deep down they're going, oh, see, you're a trader. What a bummer. See, that ain't working, man. You're not beating the system. You're like, oh, no, actually, I'm doing good. They want you to fail because it justifies them.
No, and unfortunately, isn't that so true? I mean, and I don't want you to answer this in chat out there, but think this if you're watching this. How many of you, you've probably shared, like, you're interested in trading or you're interested in investing. How many people close to you, whether it's a family member or a friend, maybe not openly rooting for you to fail, but are positive you're going to, and almost will feel like have that, maybe not happiness, but you really think that deep down they kind of expect you to, and so that they can give you an I told you so or this or that?
Yeah, it's kind of like they're working hard and they got to justify it. It's kind of like, man, I did the multi-level marketing thing with Amway and Shackley and A.W. Williams and all that stuff, A.L. Williams. I did it. I tried my hardest to make that work. And all of my friends were like, let me know if you do good on that. Then I'll listen to you. Let me know if you do good. Let's see how that works. Or you're a trader. It's funny when the market's doing good. Hey, I got any good picks? You got any good stock picks? Market's doing bad. Yeah, man. Sorry you had to be a trader. Sorry, And you're like, oh, well, they're trying to justify the change, not changing. And the ones that are really interested are like, hey, are you trading this market? But there are some people out there, Mark, that understand traders, and they go, dude, did you see that big move down today? Did you cash in on that? Did you play the down move? Did you get that big move? They're like, wow, they get it. They just don't.
And that is a sign of getting it. I mean, when I see portfolio constructions, I cannot believe how biased they are, almost always to the bullish side, almost entirely to the bullish side. I mean, it really is breathtaking how that bullish bias, and I know a lot of you out there have that bullish bias. I have a natural bullish bias. I always have to fight. I have that ingrained, even with the amount of education I have. It is something I have to constantly fight against because it's just part of me.
Yeah.
It's just part of me. You have to develop rules. Like, one thing that I found helpful, have a bearish trade out there. Even in strong market conditions, there's some stocks that really stink. Like, there's some stocks that have real bad conditions. I mean, have a bearish trade on in the midst of all your bullish. Get used to it. Feel it.
Right.
Like,
now, here's the thing I want to brag about is this down move. You guys check this out. This is a pro member only access list. The pro members get access to our option report and stock report. Like I said, there's anywhere from 25 to 40 picks. Check this out. Why am I giving this to you free right now on YouTube Live and the rest of the world? Because it's now what, Thursday?
It's Thursday, and we'll come up with a new one tomorrow.
We're going to come up with a new one. So you're done. This list, you're done with this list. What I want to show you is this. I went through the option because I track these, Mark. Just the put, if you would have bought a put or shorted or done any bearish strategy on W, which W, Wayfair. Our trigger, just so you know, I'm going to do it, and this is perfectly, so it sets up. Can you guys see my window? Here's what we do. We put the symbol. We put the sector. We put the trigger where we don't even think about going short or doing a bear until it gets below this. Our stop loss is above here or higher. You can put it anywhere you want. Just try to keep it higher than this. It triggered finally yesterday below 123, right? And check this out. Boom. It's gone from 123 down to 10, just below 108. That's a $15 move. You guys see that $15 move here? Just the amount of money you could have cashed out on a long put right now. Even if you got stopped out of the 9 above it, you still recovered all that just by this trade right. Just this trade right here made your month. I'm not going to talk about DuPont because the same thing. DuPont got triggered, and look at this one. So just by having a decent watch list with a good risk reward, by the way, this is a lot of picks for anybody. You don't have to do them all, but just a couple of those home runs right there really make you excited about a bear market. You don't get these moves in a bull market. You only get, look at this one, Mark. Do you see this one here?
Mm-hmm.
Now, we got on an option report, we got $11 stock. See that? And it still moved big. Well, now it's $11. It still moved big. So you could have shorted this stock or done a covered put or a put spread or anything. And that little move right there on a put spread almost doubles your money. Can you believe it? That little move right there. GoDaddy, look at GoDaddy. Ouch. So we had a great list this past week. And even our bulls aren't doing too bad. So just wanted to throw that out there. So on Thursday and Friday, we get to tease you with our results on the stock and option report. And just so you know, when you log in, if you're in a hurry, you go to reports. There's a market report with a scanner in there. Here's our stock report, options report. And we put how many man hours do we put in these reports, Mark?
Collectively, quite a few.
About 25.
Yeah, no doubt about it.
Yeah, so there you guys go. And that's all I have on that. What's next?
All right. So let's just talk about what the broad market's doing right now. Obviously it's a crazy market, but one thing, if you've read any of my writings to pro members, if you've heard any of my things, even the daily email this week, I'm like, pay attention to the ranges that develop during the trade war. They become critical. And we've seen this, and anyone that's heard me talk or read any of my writings on the pro membership knows that this is I mean, this is my trade book 101. Ranges develop during the trade war. Now, this could apply to any big news event, but the real big one we've had that creates the back and forth volatility over the last couple of years is the trade war. Ranges develop, and then the price action within those ranges is really, really driven by the news of the day. Really, really driven by the news of the day. And we see, like on the chart, over the last 2 weeks, starting last Monday, the resistance and support levels that have formed along the way have continued to be held. They get tested. Like a big bullish news story comes out. Market goes crazy. New traders lose their mind and they're like, they panic. They're like, oh, this it's over. But then resistance holds. And then when a negative story comes out, once again, they lose their mind, they panic, but then support holds. And this back and forth between the range as new news headlines come on is something that I hope, I know a lot of people heard me give that speech many times in May, and hopefully a few souls listened and adjusted their strategies, adjusted how they approach during the trade war, because it's a very unique condition. Most of the time, we don't have to deal with this as traders. This is not the easiest market for a new trader.
No.
I'll be the first to admit that. It is not the easiest market for a new trader, but it is still a logical market if your beliefs, your analysis, your knowledge of technical analysis, your knowledge of understanding the shifting sentiment on a day-to-day basis is a totally logical market once you figure it out. Those individuals listening to me in the lounge in March of 2018, they're like we took 2 weeks theorizing. And if you're longtime pro members that are listening to this, you'll remember this. When the trade war first erupted in March of 18, I was hosting the lounge every day. And I was like, I've never seen anything like this, people. We need to think, we need to theorize, we need to do nothing until we figure it out. But then we came up with a working theory. Then we developed that during the 2 weeks, and it has been totally applicable in 2019. It is hard to trust your eyes on the singular news event of the day. You know, I mean, how do you approach this, Gino?
Well,
and what are you eating, by the way? I want to know what you're eating.
Oh,
I haven't had anything to eat today. And so you eating is making me insanely jealous.
What am I eating? I was looking at that. It's really good. It's called an almond butter cocoa bar. It's
you California hippies. Jiminy Christmas. I mean, a California what?
It's an ABC. It's an almond butter cocoa bar.
I'm gonna go get me a steak burrito as soon as this show's over. I take back all of my jealousy.
You know what?
I am no longer jealous.
Brussels sprouts and avocado toast, man.
Oh, you California hippies. You are something
By the way,
else.
I was looking at this because, I saw ABC and I was like, where did I just see that before? And I'm like, ABC, who? Oh, it was the technology of Lululemon's pants for the men. They had that new technology.
He's just adding on to it.
I was just wondering where
You're just making stuff up now.
No, they have a technology. A new technology is high end at Lululemon to justify the price. Men's pants have ABC technology. What is it?
I'm gonna Google this. Hold on one second.
What is ABC technology? Yeah, I gotta Google this too.
But I'm calling BS on this. But I'm not 100%.
You guys, they have I don't know how you get high tech.
Okay, they have the ABC. What does Lululemon and ABC stand for? Anti-ball crushing.
Oh my God.
What is it?
ABC stands for anti-ball crushing. This is coming from Business Insider.
Yeah, it's actually on their label.
And so that is and they have a whole brand line on this. They have on Shop Lululemon, it's men's ABC collection. So that is, I guess, how you get people to pay $130 for yoga pants.
There it is. Right there. That is a good brand right there.
I mean, I will never pay $130 for yoga pants in my whole life.
No wonder I put the 2 and 2 together, because I saw ABC here and I'm like, what am I eating? And well, guess what the first ingredient is? Nuts. Okay, so there you go.
All right, so back to the market, guys. Let's talk about oil.
Let's talk about oil. That's enough about speaking of,
we gotta at least look at Lulu's stock chart after all that nonsense. I mean, we gotta at least let's go look at their stock. I mean, Lulu's had a good run the last couple of years. I mean, not the cleanest trend.
Real quick, before we look at retail, I always make a habit of looking at the sector and industry if you know what it is. By the way, guys, I was looking at this yesterday, and me and Matt Justice were talking about this. Retail in a recession or a market correction usually takes a huge hit because it's discretionary spending. Now, look at this downtrend. I'm going to throw it right on the 20-day moving average here. The 20 is crossed the 50, and some people will call that the death cross. But then when the 50 crosses the 200 is way down here. There's still room to make money on discretionary. But when businesses get hurt, you will see, and I'm looking at this. In fact, what I like to do, just to keep myself reminded, and it only takes 2 seconds to set a reminder like on your broker, there's a serious support here level on the discretionary spending sector. I'm going to right click right here. I'm going to hit create alert, and I'm going to put discretionary, or you can put retail breaking down. These guys take huge hits. And when I put, now since it pops up on my text or my email, I have to put down or up big so I know. And there it is. Hang on a second. Right click, create alert, below, at or below. Retail down trigger. And you don't have to do a lot of, there it is. See it right there? Because this will give me ideas as soon as it breaks down. I already know who I'm going to short. I already know what stock I'm going to do. I might even just trade this. But just so you guys know, retail's made a huge run. If you're only looking at a year, you're not going to get the full picture. Let me back it up to 3 years. And this is why Matt and I were talking about it. Here's 92 way down here. That's 20% lower easily. And if you go back, this thing has doubled in the last 2 or 3 years. And retail, when they start losing money, they really take a hit. And so this is a big trigger right here. So looking at that now, I'm going to go look at Lululemon because there's a lot of candidates here. We had so many in our stock and option report. Who do we have in there? We had American Eagle Outfitters. God, I just forgot who we had. We had a whole bunch.
We've had a lot of retail companies on all year long.
Nordstrom Rack. We've had Macy's.
Well, here's the thing. We had so many in the stock and option meeting. We had to pick and choose. We had so many. We had to pick and choose.
The craziest thing is that retail reports came out this morning. They were actually up, but I guess it's easy to be up when you're getting beat down all year.
By the way, I'm on the same chart. Looks like the same chart. I'm on a different symbol. That's Lulu. Same trigger. See that? Did you guys notice that? Here's Lulu. Here is XLY. Look how similar they look. Look at that.
Almost identical.
Now I'm going to go to retail industry. Look at the retail industry. These are the retailers. Basically anything about very similar, isn't it? They're all still above that 200. Well, like if you're like me and Mark, we take these major moving averages seriously. We don't like to short things that are right above it until they get below it. Your odds really intensify if they go up for you if you put your trigger below the major moving average versus between here and there. So, and plus it's going to trigger a lot of scanners when it goes below the 200-day moving average, people that look for stocks under the 200, that kind of thing. So there's a lot of stocks that are already triggered. What was it? AEO? This is one of our picks. And this is why we look at that. This one already triggered. So who's similar to Lululemon that we can compare?
Lulu's really, I mean, because I mean, in your retail category, you have so many different types of retailers.
I would say American Eagle Outfitters, all those.
So my favorite stock to short, and it's always been my favorite stock to short, is
Nike. Nike's there.
LB right now. It is amazingly awful.
How about Nike? Now, see, when I say that, notice I'm looking at the sister companies that are like Lululemon, retail clothing. Maybe.
I mean, if you want to find, but I mean, Lulu's a little bit unique because like companies like Macy's, they sell different brands.
So
I mean, they're a broad reeler. Lulu operates their own shop and exclusively sells their product.
Oh, Macy's isn't looking pretty at all.
You know, so.
Now, Target would be completely different. Completely different. Because now you're looking at, what do you call that? Multi-line
big box stores.
Yeah, they have grocers and everything in there.
Walmart. Look at Walmart's actually outperforming all of them.
Well, Walmart beat earnings this morning, but it's come down since its initial open.
Like you can't compare it to Starbucks because that is different. Notice how Starbucks is it's retail spending, discretionary spending, but it's in a different area. It's in the guys that drink coffee. It's based on commodities market also. And look at that. That's holding up pretty good, isn't it? For being a retail company. So this isn't one even though it's in the discretionary sector, it's not one that I want. I want one that's in the right industry. So we got RTH, and you can go look up stocks there. And we have what else? What is it? XRT. Check out XRT. So XRT, those stocks are in retail. These guys are really, in fact, that might have been just a good short right there. So how do you find the stocks in these industries? How do you do it? How do you do it, Cody or Mark?
I mean, I have my own watch list that I, peruse. I mean, we always have a couple companies that we enjoy trading more than others.
Yes.
Like Cody was just mentioning, his favorite one to short.
LB. Yep.
Yeah. I mean, so we have those, and there's nothing wrong with that.
No.
As you get familiar, in fact, you can make a lot of positive things that instead of trying to know the universe in every retail store out there, find those companies that maybe you have some familiarity with, something a little bit about, and then follow those. And so I always am constantly working my own watch list. And of course, our scouting reports, which is probably one of the more valuable outside. See, some people would say our scouting reports are our most valuable. I think it's the core education that's the most valuable thing we offer at Tackle Trading.
Yeah.
But the scouting reports certainly, a lot of individuals, they're our most used product at Tackle Trading.
Yeah. So what I'm going to do real quickly, I just want to see because this is amazing to me right here. They make these ETFs up. This is the retail ETF, XRT. Notice how it's really downtrending here, right? Versus RTH, which is a different retail. It hasn't really triggered yet. But you're like, well, wait a minute. They're both retail. Whoever made up this fund, this is VanEck Vectors ETF Trust Retail versus XRT, another retail ETF. That tells you where the weakness and strength is by looking at the ETFs. And I look about 50 to 60 of these different industries every day. I have them on a watch list. And there's ways you can see it on our newsletter. We have the major sectors. I'm going to look at both these. RTH, this one is definitely, I'm going to find the stocks in here. And so we can get some ideas. Ready? I'm just going to go to I'm just going to go to Yahoo Finance. I'm going to put in RTH. Now, remember, these haven't quite triggered as hard as when I go in there, it's going to say holdings. I click holdings. Here we go. Amazon is 20% of the holdings. Home Depot, Walmart. Now, I'm going to tell you why this one hasn't triggered. Because these guys aren't as much of a retail. The Home Depot and the Lowe's, they're more of real estate and home builders. See that? But they are retail stores and they're one of the big giants. Walmart, again, conglomerate, multi-line. Walgreens, Target. We saw that those didn't trigger yet. They're big. So see the holdings here? Now watch this. When I put in XRT, these guys all triggered. So this is where the real weakness is in. There we go. Dillard's, Abercrombie Finch, Auto Nation. That's interesting. Guess, Gene Store, Stamps.com. Again, why is Stamps.com in a retail industry ETF? Does that belong?
Because people that make up ETFs do whatever they want.
Right.
And,
that one.
And I really
Really?
Remember.
Why would they put that in there?
Because literally you have to remember something about ETFs. ETFs are marketing. They're a product, but the name of the ETF has to do with marketing. What they put in that ETF can vary dramatically. Now, could you say, well, it's an online store, so it's retail? Sure, you could make that case in the sense of whatever. But is that what we think of when we think of retail? No. So you got to remember, like, look at the composition of the ETF before you trade it. I mean, I hear even people that been around make missteps about what's in an ETF. Like one of the most common missteps is the material sector.
Oh yeah.
The material sector. I mean, go look at XLB. Go pull up XLB.
So XLB.
Because I mean, just think outside right now. We hear materials.
Right.
And so we're thinking basic commodities, right? I mean, that would be logical, right?
Let's go look at it.
But let's go look at XLB. Because and this is the big one. This is the one everyone trades. Go break down. Go up a little bit. Where is the breakdown of
right here?
When I'm trying to look.
What they're in?
Does it have an industry breakdown within it? Go down a little bit. There should be
right here on the left. It says 12% in consumer cyclical.
Yeah, but that's not what I'm looking for. Go down a little bit. Well, let's just go look at the top holdings.
Right here.
You know what I see? I see a whole bunch of chemical companies.
Yep.
You know what I don't see? I don't see oil companies because they're not included. You have a little bit of gold. You have a little bit of a lot of stuff, but you have a whole bunch of chemical companies. XLB might as well be called 3/4 chemicals and a little bit of everything else.
Exactly.
But that doesn't make for a good ETF name, does it?
No.
I mean, would you trade 3/4 chemicals and a little bit of everything else?
And
probably not going to get a lot of traction. So we call it materials.
Yeah. So that's why I look at multiple ETFs. You got to kind of go, wait a minute, what's going on here? What are they actually in?
I mean, it's something to be aware of. I mean, you think you might be trading something in an ETF. Check the composition. Yep,
that's so true. And did I lose? Hang on a second. Here we go. Which one? I was going to look at the market carpet. I don't know if you guys look at the market carpet. That's another way to look at where the strength and weakness is. And it's not really, I don't know if I need to go to the market carpet because you know why? Everything's red, right? But once you find an industry you're in that's bearish, finding a good candidate or two makes time so much easier. So who's your favorite bear in that sector? Who's your favorite bear in that industry? Who's your favorite bull in that sector and industry? So if you have, what do we have, 11 sectors and you have 2 picks in each one, you've got yourself a watch list for bulls, you got your watch list for bears. You don't have to use a scanner or a screener. And it's better to do that, and it saves you time learning a couple stocks in each one. The way I do it, Mark, I don't know how you do it. I like the strongest fundamentals in that sector and the weakest to find out. And we made that really easy on our newsletter. Have I showed everybody that before? I'm sure you guys all seen it a million times. So in our newsletter, I did the last week newsletter. How do you know who's the strongest? Like, of course, they can cook their books like Enron or GE. And that's why you got to look at the chart. But I'm going to go in the newsletter here and let's pick a sector real quickly that we're bearish on. And that's pretty easy, right? I mean, you just come down here. I'm going to skip over this, go right to the sectors. Usually in August, technology and utilities are the leaders. We're seeing utilities pretty strong still, but not so much technology. Like you said, Mark, here's materials and discretionary. And this is why I'm focused on discretionary, because usually in August, it's the worst. Seasonality, last 20 years. But looking down here, materials, and where is my discretionary? Right there, right next to it. They were below the 50-yard line. Anything to the left of 50 when it starts getting more red is bearish. Energy's way down there. That's our more. So with a glance at the gridiron, you can easily see where the strength and weakness is real quickly. And then from there, you go with that strength. So energy, and let's pick one. Discretionary or materials, which one?
Go discretionary.
Okay, discretionary, since we're talking about it. How do I find the sister companies there, the holdings, and how do I find a candidate to trade? And since I'm an investor, how do I invest my time wisely? Because it could take you forever. We can talk forever about companies and Lulu and all these things. But what you do is you come down here and you already have it set up. Now, this was set up for me. I set this up for my computer before I even did this with Tackle. So I go down here and check this out. There's discretionary. Now, we only put a few in here not to make it complicated. You could put RTH, you could put whatever. I right click on discretion. I open up that sector in its own tab. And by the way, this is pro member access. This is the fastest way to find a screener and build a watch list and make yourself a portfolio to watch ever. And boom, what we've done is we put all the top holdings that have volume over 500,000. They're optionable and they're big names and they represent that sector. I've weeded them out. Here they all are. And here's their charts. Now, if I want good fundamentals, learn fundamentals. I'm going to go to valuation. I personally go by PEG. If I have to pick one thing, PEG ratio. Good fundamental companies have PEGs under 1.5. So if I sort them this way, this is going to give me a lineup of best to worst fundamentally. Now, step number 2, this tells me what to buy if I'm bullish. When I buy it is when I get my trigger on the chart. I'm looking for bears, so guess what I'm going to do? I'm going to switch the PEG to the high numbers. Anything over 3 is considered a good short fundamentally. Now that I have them laid out, worst fundamentals and down. God, Ford's up there is worse. I'm going to go over here to basic, and there it is. They're all lined up. So I'm going to quit. Now, there I go. So now I have a watch list. How long did that take me? Less than 2 minutes?
Maybe, if that.
Here's your trigger below 110 on Mohawk. Boom. For a bear. I already know the fundamentals are the worst in that sector. Here is a great trigger below win. Look at that. God, that's a great trigger below win. I might even do an out of money put spread on that one. One trade for sure. Oh, look at the trigger on Marriott International right there. So this, you guys see the.
Well, let's go ahead and start coming back to the charts because we're coming up on the very end, and we've decided that on Tuesdays and Thursdays we're going to do one thing that our students absolutely love, and that is rapid fire. So if you guys have stocks that you individually would like us to take a look at, we will give you our 5 to 10, 30 seconds if it's Mark's.
All right, we got 5 minutes.
Okay.
We got 5 minutes to get this all done. So let's do this.
5 minutes is all we're going to do. So get your stocks in right now, guys.
Okay, somebody read them out. I can't see them.
Let's see. They're not coming in. We got a little bit of delay, so we got to give it time. But we do have Adam had already put in Amazon to start with, so we'll start there.
Amazon. There you go, retailer, right? Look at the trigger below the 200. Now, right away, I'm thinking put spread out of the money down here.
Sounds good. Next is STZ.
STZ.
Mark, go ahead and take this one.
What do you think?
Okay, first of all, everything I do right now, I look at the range of the stock the last 2 weeks to see if it's relatively stronger or weaker than the market itself. This is relatively stronger. Still a messy chart from an entry standpoint.
All right, SLV. I'll take SLV. Silver. Silver is
a bullish one.
Exactly. It's been just a juggernaut along with the rest of the metals market. As fear is up there, uncertainty's up there, your metals will continue to do well. Next is Baba. You know,
Okay, actually, let me clean up this chart. We had this in a class not too long ago. It was bearish setting up, but look at this gap up to shake everybody out. Stay away from this until it settles down.
Awesome. Next is OEC. Isn't that the ETF for the? No.
That's Orion Engineered Carbons, South American.
Breakdown after earnings, classic bearish pattern. Any bearish retracements and bearish breakdowns, 2 core step patterns are just textbook what you look here. Not happening today, but obviously in a chart like this, it could happen at any time.
Mm-hmm.
Let's go FCX. FCX. I will take it. It's the trigger for FCX was a break.
Oh my God.
50. So that break 950.
Now, and I just want to comment on FCX because I got a million questions because I write the commodities report every week over the last few months on FCX, and I've told people to stay away from FCX because of for a lot of reasons. I hope they listen to me. It's not that I don't want to buy FCX. It's not that I don't think there's a great boomerang opportunity here, but copper is getting killed. Go to /HG.
He asked it as a short. As a short right here, I think you might be late to the party.
Yeah, because it's a cheap stock. Not a lot of room to the downside unless it goes bankrupt. There's copper.
Now, FCX just giving out. It's hard because if FCX breaking down and you have that big a move,
right?
But copper's not. I don't know.
Oh,
I don't short FCX. I only buy FCX, but I don't. I don't short really cheap stocks.
God, here's my AMD. God, I got so many drawings.
All right, AMD was on there. If you want to go ahead and analyze AMD,
I'm just reading it off the list. AMD. I like to trigger below 29.40.
All right, let's go KGC.
I mean, he's talking to the bearish side. Gino is. I know a lot of people only think of AMD from a bullish side.
We found a bullish one.
We found a good bullish setup right there.
That is that's textbook step system. That is textbook step system. Enter in above high according to your entry quality, but that is a textbook bullish retracement.
Really nice pick there, Johnny. Next is IMT.
Well, we didn't know
OEC. LMT, Lockheed Martin. Excuse me.
OEC bearish. And what was it? LMT?
Yep, Lockheed Martin.
Oh, boy.
I like that one too, actually.
Not too shabby.
Breakout retracement.
Right above here or up here?
I'd probably play the retracement versus the breakout.
Okay. Next.
Next is Shop. Mark, go ahead and take Shop.
Pretty pull. I mean, Shop has been a juggernaut. I mean, obviously, ridiculous bullish relative strength in these market conditions. One of the strongest technical stocks out in the market, doing a nice classic retracement pattern right now.
Yeah,
that's a pretty retracement pattern.
Match MTCH. Man, you guys are getting some good setups right now. Y'all are making our job easy.
That triggered today, right above the high of the doji. And if you missed it, you gotta wait for the trigger tomorrow above this one. Stop loss goes below here on a swing trade. Next.
Definitely like that. VIPs.
This one's volatile here.
Looks like they gapped up on earnings this morning.
Was that earnings today?
Or yeah, I think it was this morning before market hours, or was it yesterday after market?
Yeah. So let it shake out.
Yeah, let's see what it does from here before you look at it. We've already done AMD. Let's look at LPSN. We got 3 more, then we're gonna be done, guys.
Liver spunk. What is that? Oh, triggered today.
Trigger today, retracement. Look for a trigger tomorrow if you're not already in it, unless you want to go intraday. MELI.
Melly.
That's a messy chart. I don't even.
I do like the resistance. It hit his head and see how it's resisting on the moving averages here, these crossovers. Trigger below here or even below here will send that thing south.
All right. And finally, finish it off. Mark, finish us off and then send us out. VTR.
Obviously, relatively strong to the market. Do you wick or not? I mean, it is breaking out a short-term resistance. Do you consider the wick? It's a phrase we joke around at Tackle Trading. Do you wick or not to wick? If you use the wick, there's still some breakout levels, but this is really, really strong chart. It's just what are your rules to play it, because it's really, really strong. All right, so tonight on Tackle Trading, we have the Cash Flow Club at 8:30 Eastern. I'll be hosting that tonight, going over market conditions, module 4 of the Tackle 25 system. And then, of course, having an open discussion, looking at your trades. It's kind of a Cash Flow Club's version of Rapid Fire, except we go into detail analysis. You bring the picks, we look at them, not your picks, your positions, and we analyze them, we look at them, we try to apply covered call theory, all kinds of stuff. So that's tonight, 8:30 for pro members, Cash Flow Club.
Awesome.
Say goodbye.
With that, guys, we are out.
See you tomorrow.